So yeah, what type of hurdles would us self-employed people face when it coming to applying for a mortgage, especially like with the whole financing stuff? What type of barriers are there in front of us?
If you think about it now, if you have only been doing your accounts for 1 year, then obviously it's going to be very difficult to prove to a lender, because lenders need at least 2 years.
Right.
It used to be the case it was 3 years. Now they only need 2, so they've even been more lenient. But if you don't have much accounts, it's going to be difficult.
So wait, sorry. So when you say accounts, do you mean declaring your taxes, doing the tax return and all that stuff? Okay.
Exactly. So obviously with self-employed clients, you get a situation where some people obviously don't declare no taxes. So if you don't declare no taxes, then your self-employed situation doesn't exist to nobody. Obviously to yourself it does, you've been taking cash in hand, but in terms of a lender, they need to see things on books. So they're either taking what they call the SA 302s. So that's a tax summary and tax calculation that you can get from HMRC's website when you submit it as a sole trader. Or alternatively, if you use a accountant and you're registered limited, you know, as a, so for, say for example, you LTD,
right.
Then obviously the lender would want the accounts, the last 2 years accounts, and they'll take an average of that. Now, there's no real barriers. It's just more so a knowledge about your own accounts and your own affairs. Again, this goes back to my original point. If you don't know your own accounts, you're going to find life very difficult. You understand? So you need to know your accounts, have an accountant there, because, you know, we're getting to that age, you need a lot of professionals in your life. So it's not expected. And when I talk to a lot of self-employed people, I expect them not to know much about their situation. But if you've got a professional like an accountant that's on job, then when I tell you to get certain things and you go to your accountant, that accountant will have them things ready for you.
Fast.
You know what I mean?
Yeah.
Because at the end of the day, there's no point, because you're an actor or you're a plumber or whatever the case is, you're too involved in your own life and your own profession to make your own peace, to really be trying to break down the nitty gritty of SA 302s, SA 100s and all that jazz. Not that it's complicated. You can
just
know
don't
it.
have the time for it.
You just don't have the time. And that's the truth. You just really don't have the time. But as long as you know yourself well enough to know who's dealing with your accounts, your tax reporting status. Now, if you that's dealing with yourself, then obviously I ask you this question, you don't know, that means you're crazy. You don't know what you're doing. But if you have somebody on point that's looking after your tax situation, then you should be fine. So with your tax situation, obviously I don't want to get into your tax situation, but do you do your own?
I've got an accountant.
Exactly. Then there's no wahala. There's no wahala. So all it is if you've got an accountant, all you have to do is say, accountant, or Sheila or John, my mortgage advisor said I need X, Y, and Z. Your account will know straight away. I will send that to you and I'll do the rest. Because you have to deep it. Between you wanting to get your house and everything else that's going on, I'll be honest with you, it will bore you to death. It's not entertaining. Like, it's me just on a calculator and looking at policy. And it's the same with your account. You just, you know what I mean? You just want your house. So as long as you know your account, you know who they are, and you've got a good relationship with them as a self-employed person, simply anything that's requested for you to prove your income information, you can go to your account. If you want to learn about it and what they do and the rest, I can give you that information, but in reality your account will get all that sorted for you. The only drawback really is just the fact that a lot of lenders go off your average, so your average last 2 years. So you know, when you've got spikes in good performances and downward dips, then obviously your averages could come out a bit mad if you're coming to see me on the year that you got a dip. So one drawback is the fact that you have varying levels of income, which means that year by year what you can do and what you can borrow changes so drastically. But the benefit is you can effectively, unlike the people that are on fixed incomes, manipulate your situation so well purely just by coming to us to start an application when you're at your very best. So if you've got a 2 years, the next 2 years are sick, bruv, this is the time you should be looking to get a yard if you've got a deposit built up. Do you get it?
Right.
So if you've got a sick run, if you know you've got a dead run for last year and this year is going to be dead as well, you know,
just hold off
take
a little
time.
bit.
Yeah, take time. But if you've got 2 years and they're sick 2 years, brother, that's the time to go, because you're gonna look, you know, strong. Declining profits is something that lenders are looking at now. So if you had one sick year and then you had a big dip, some lenders might just decline you.
Yeah, so the last 2 years have been hard for, I imagine, a lot of people. So would that would play a big part, right?
Yeah. Don't get twisted. You can get lenders that will borrow to you, but it's just a case of you're like, say for example, that you had 100 lenders that were on your side. Now you've got down to 40. You understand? Obviously you really want 100 to make sure you're getting the best deal possible. Yeah. But at the end of the day, beggars can't be choosers. But I'm just giving you an idea of one of the drawbacks. But in reality, being self-employed at the moment due to the whole COVID-19 right now has made things a bit more harder because some lenders are being a bit more restrictive as to how they're calculating income. So one of the lenders, for example, I was helping out one of my clients today. One of the lenders, I found that they're not even doing averages. They just want to know which one's the lower of your last 2 years. I was like, you just want to go for the lower of the last 2 years. Some lenders are going crazy, but there's other lenders literally, like I said before, you've got banks that literally want a certain type of clientele. There's lenders out there that just want self-employed people. They if they hear that you're employed, they're like, oh, but we like it when it's self-employed. You know what I mean? So some lenders are like, look, we'll take your first year's accounts. You get me? Some lenders don't even want to see 2 years. They're happy to just take your first years, and that's good to go. They want to know that you've been trading for 2 years, but they'll just take off of your first. So everything's possible in this game because there's so many banks out there. So in reality, to the drawbacks of being self-employed, the drawbacks are that your income varies. So that means year on year, stuff can be very different for you. But one of the benefits is that same drawback is your positive, which is if you've got some sick years, you'll be looking better for it. Outside of that, and lenders being a bit more restrictive, all in all, it's all the same. You know what I mean?
But I don't know, maybe it's a rumor, but I kind of heard that lenders would expect a higher deposit from self-employed people.
That's what I mean. That's what I'm saying. Every lender's got different rules.
Right, okay.
So, for example, I know a lender right now that I literally just saw they've got a new policy for self-employed. You need to put down 25% minimum. But I could easily kick that lender out of the window, to be honest, because I've got lenders that will accept 10% same way.
Right.
You get me? So, it's a case, because I know the market, it's a market at the end of the day. You know what I mean? Everyone's apples ain't the same. Everyone's bananas ain't the same. So, it's a case that some markets, you've been Stratford, some man don't even have plan 10 and they call themselves a market. It's like, you're mad, bruv. You know what I mean? You don't have plan 10. So, it's the same thing. If a man comes to you and says you can only do 25% deposit, you're self-employed, and you want to put down 10%, come chat to me. I'll get you a guy that can give you 10%. You get it? That's what my job situation is. You understand? So I can get you 10%. That's no problem. I've got a bag of people 10%. It's no issue. It's just the thing is mostly just knowing your circumstances. Once you know your circumstances, you know what you're earning. Everything else, in terms of policy, we can ignore the people that you don't want to run with. Do you understand?
Yeah, this conversation is like a double-edged sword for me, because I think where it's like so key to have an expert like yourself, and obviously this is your bread and butter, we're in two completely different fields.